Hello financial investors and welcome to the channel. My name is Brent and in today's video we are going to be doing our Stock Tuesday buys here on the 3rd of November 2020. It's also election day, so it does look like it's going to be a pretty good election day overall, pretty positive, but we'll check that out as the day goes here on Tuesday. What we're going to be doing in today's video is going over the recap of the week. We didn't really get into this weekend. We were really busy kind of doing some activities at home, so I didn't get to record a video, but we'll take a look at the three main indexes. We'll also be taking a look at the M1 Finance Roth IRA portfolio, take a look at the overall performance of the portfolio, what stocks are doing well, what stocks are doing the worst. We'll also take a look at the 1 week performance as far as what stocks were up, what stocks were down, the three main ones. I'll look at the three top and the three bottom ones of the past week. And then we'll also take a look at the overall performance here for Monday. If you guys didn't sell out last week and became emotional over your portfolio may have recovered pretty nice today. We can see that the Dow Jones up 1.6, the Nasdaq, those tech companies not really performing as much as the market, is up 0.42, and the S&P is up 1.23%. So pretty interesting at the moment. So if you are brand new to my channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, which is at least 1 to 2 times per week. I'm trying to get back on and start recording 1 to 3 times, 3 times per week with our Monday, Wednesday, and Saturday video. But that is definitely coming here in the future. So, and then of course, give this video a thumbs up if you find it fun and entertaining and helpful. Okay, let's get into the video. So right now, as we said, stock futures are looking positive and creeping up higher every time I refresh the page. So the S&P up 0.41, the Nasdaq up 0.28, the Dow Jones up 0.53%. Now the main headline here is stocks are zooming higher as Wall Street predicts Joe Biden will win. I think that this presidential election will be very, very close. Remember the last presidential election back in 2016 when everyone believed that Hillary would win, but guess who came out on top? It was Trump. So I think this election, the headlines, the media is really pushing on current President Trump, and a lot of them are really promoting and showcasing how much they're predicting that Joe Biden will win. So I definitely think it will be an interesting election. I'll be tuning in for it. If you guys haven't cast your vote, definitely go out there and take them to the actual deposit box because it's a little bit late to mail it in today. So definitely go drop it off if you haven't done so. So I think it'll definitely be an interesting day. Now this week, quickly covering the weekly recap from Tuesday to Tuesday, a 5-day change here. We can see that the S&P 500 took down about 2.67%, but this is including today on Monday gain of 1.23%. So last week it was down, I believe, maybe 3 to 4%. I really did not check the markets last week at all. I had got some notifications on Facebook from the groups that everybody was getting scared, asking the groups what they were doing. They were selling out of their portfolios. I was over there commenting, saying, hey, I'm going to go ahead and buy once again on Monday or Tuesday. Doesn't really matter what the market's doing. I'm going to dollar cost average my cash in because I'm investing for 30 years until I'm 60. Plus, I'm not going to be pulling out my cash at exactly when I'm 60. I'm going to be continuously getting paid out dividends from my portfolio, those tax-free dividends, all the way up to the point where I'm no longer here and I'm in the ground. And then I'll just pass on my entire Roth IRA tax-free to my children. So that is my plan. So I'm hoping that's at least 60 years out, but we'll see. S&P 500 overall for the day 1.23%. The Dow Jones down 2.75 over the last 5 days, and today alone went up 1.6%. That is a very nice upside there that beats out the S&P. And then we had the Nasdaq here kind of slugging behind. So these tech companies weren't really the best performers today, which is really interesting to see. Overall, they did get beat down the most, down 3.53%. So they were down roughly 4% for the 5-day change. The Dow Jones looked to have been down around 3.5%, and the S&P was probably down around 3.5, 3 to 3.5% as well. So we can see that our year to date, S&P up 2.46. The Dow Jones is negative by 5.65, and the Nasdaq is up by 22.12%. Now, jumping over into our portfolio now. So we've kind of done the weekly recap from the 5-day change from Tuesday to Tuesday. Now taking a look at the overall performance of our portfolio. Now, our three winners are Apple, Eaton Vance, and Lowe's. So those are our three best performers here in the portfolio. Those are pretty good names out there. Eaton Vance may not be one that a lot of individuals are familiar with, but really interesting there, financial as well. Then our three worst performers down here: Simon Property Group, Tanger Factory Outlet, and Chevron. So those are, maybe these two right here are not too popular, but everyone should know Chevron, Ultra, Walgreens, AT&T. So it's really interesting how much of a dive our worst performers are in comparison to our slightly worse performers. It goes from slightly negative to about 10 or so percent, and then it just jumps off the diving board down into the 30s, all the way down to 73% to the downside. So really beat up down there at the bottom. So that is the overall performance. We can see that we do have about $1,000 of market gains. We've collected, or in the process of collecting, now breaking $1,500 in just straight dividends. This has been about 3 years. In January will be the time length of this portfolio, since January 8th of 2018. So on January 8th of 2021, this portfolio will be exactly 3 years old. Now, our 1 week performance, we can take a look here. We are down 2.03%. We lost $520. But again, this is after our Monday. Monday was very positive here. So we can see here that over the 1 week, we were down $520. We're at $25,094. But if I take a look at just a few weeks ago, this is my little videos tab here. I started to put these numbers up on my thumbnails. I got this from, I believe Joseph Carlson does it, and there's a few other YouTubers out there who do this. I think this is really nice visual. That way you can see the markets, how they did the week prior. You can see the portfolio, where the current value is at. You can kind of see and visually see how your portfolio is doing by looking at the thumbnails. And we can tell here that we were about 26,000 1 week ago, and now we're at 25,000, really close to it. So we lost about $1,000 of equity. This is showing about $500, but again, Monday, today alone on Monday, we made up $535. So we're still down in the bucket about $1,000 from our high, but we recovered $500 of it today. So that 1 week last week, we had lost about $1,500 worth of value, made up a quarter of it today, or 1/3 of it today, and we'll see how these next few weeks go, but we may make up the next third of it, third or however much of it over the next few weeks, depending on how the market goes. Right now, it's looking pretty positive, and that's why you never want to freak out, get emotional about your portfolio. Think about it long term. As long as you bought your holdings within your portfolio in solid companies that you believe in for the long term, then there should be no doubt whether you should buy, whether you should hold them or sell them. If you told yourself that you gave up hope that Chevron will ever turn around as a business, that their earnings have been decreasing, their net revenue is dropping, there's no chance that they will ever see any sort of revenue growth in the future, then that might be a time when you may just have to cut your losses and sell out of a specific business. But if you still see that they are scathing by, their revenue has been kind of up down, but overall they're doing they're implementing different changes within the business to grow their revenue back up, take advantage of the current environment and such, then that could be a reason to just kind of continue to hold and look to the future. I'm 35. I have 25 years until this portfolio would even be tax-free. This is my wife's portfolio, so she still has another 30 years till it would be tax-free. And then even at 60, you're not going to be withdrawing all your capital at once. This portfolio is designed to live off of, pay you dividends on a weekly, monthly basis. So it'll just be an equity bundle owning a bunch of holdings that pay you out dividends that are completely tax-free. So by the age of 60, she may be getting several $1,000s from this portfolio, and also our real estate portfolio paying her dividends, and also other sources of income. So you always want to have different sources of income, and you never want to sell out of your income earners without a reason. So I don't know if that was a little bit off topic, but let's get back to there. Okay, so as far as activity, the 1 week goes, we didn't receive a single dividend last week. That's really interesting because every week we generally receive at least one dividend, if not multiple. So to have 1 week here is really interesting. That may have been one that used to pay out a dividend but no longer pays out a dividend, such as Las Vegas Sands or Tanger Factory Outlet. Both of those companies have cut their dividends during the illness and may pick it back up in the future, but for the short term they are no longer paying a dividend. So that's that right there. And again, that's why we only have that cash balance of $50, because that is all that we deposited there on Friday. Now, as far as going into what stocks we're planning on buying here today, what we're going to be using is checking out seekingalpha.com. Great website. If you guys sign up, it's completely free. Then once you have signed up, if you head over to your portfolio, you can create your portfolio, enter in all your stocks within here, and then if you select the dividends tab right here, you're able to sort all of your holdings by their ex-dividend date. So if you're like me and you like to buy something that is negative within your portfolio that you still believe in for the long term, and it's also coming up on ex-dividend, that could be a really good way to buy. Today here is the second, or going on to the third. So here, Apple, Pfizer is coming up. So what we can do here at this point is jump over to my spreadsheet. Now, last week I did purchase, I believe I bought two. I purchased some Cisco and some JP Morgan. So Cisco and JP Morgan, we'll take a look here where these are at. We do have a few more negative. We can see here last week prior to the video, I sorted these from positive to negative. So 3 of the companies looks like Pfizer, Cardinal Health, and UGI moved into the negative, which is opportunity right there for Pfizer. I know I want to own, I did want to own. It looks like Pfizer's about $1,000. Cardinal Health is another great company that I could always add more equity into. It's now in the negative. Even after today's Monday, it's slightly in the negative. It'll pick back up into the positive here on Tuesday. So let's take a look here. What's going up on ex-dividend? We have Pfizer, Apple, that's a high flyer within the portfolio. The Southern Company, ticker symbol SO, is up towards the top as well. I'm really looking for one that is not flying high. So Consolidated Edison, Chevron, and Walgreens. So I know Walgreens is down here and Chevron is down here. I'm not really interested in buying any more retail or oil at the moment. So those are kind of out of the question. I wouldn't mind buying more Pfizer. I do believe Pfizer is a great company. I think $1,000 is where I was comfortable holding it for the time being. But as I can see here, as I'm looking up the list here, there's not a lot of options that are coming up here in November that are currently negative. So Johnson & Johnson, that's currently positive. Where are you? Johnson & Johnson must be up a bit more. Let's go ahead and I don't see it there. J&J right there. Okay, so it's not too much positive. It's only positive by 1.34%. So it is slightly above Pfizer there. So that could be one option. I don't get a lot of opportunities to buy more of Johnson & Johnson. It goes ex-dividend on the 23rd. So what I'll do here, because I have $50 to invest here today on Tuesday, I think I'll mainly focus on one company. That leaves me with another week or two up until the 23rd, and depending on how this week goes, it can go either positive or negative. Maybe J&J has some negative news that kind of puts them down into a better buying opportunity. Where, you know, Johnson & Johnson, I wouldn't mind buying more of, up to $1,000 there. So it's really close, about $150 there to $1,000. But for the time being, I think I will put a little bit more cash into Pfizer It is down slightly at 0.76%. Depending on how the market goes here on Tuesday, I may get a better deal at open, and then it may uptrend from there. I am locking in a 4.2% starting yield on just the new shares, and my current yield is at 4.16. So it's definitely nice to average that down. Currently, depending on, with the number of shares that I currently own of Pfizer, I will get $10.50. But if I put another $50 into it, I'll probably get maybe closer to 1070 or so. Right there. Okay, yep, I was correct. I was highlighting J&J there for a second, but that is correct. So I think we're good with Pfizer. I think Pfizer is a good buy today. Let me know down in the comment section below, what are you guys planning on buying? We can see here market gains. We are down by $7.67. So really nice there. If you guys haven't checked out M1 Finance, they're a really great platform. I actually enjoy them, but I am planning on moving to Fidelity still. I've just had a ton of things going on here in the personal world. So I am planning still on moving from M1 Finance to Fidelity, but they're definitely two great options depending on what style of investing you're going for. If you are more passive, you like to deposit capital. So here I set up a transfer. I set up every Friday. It transfers $50 regardless of what is going on into the portfolio. It used to be $115.38, but because I did make a bigger deposit earlier in the year when the markets were down 30%, we deposit $50 in order to dollar cost average our way to the end of 2020. So M1 Finance, they do a lot of robo advising, but it is also free, so it doesn't cost you anything. Unlike other platforms, you can also create your pies. You can create several pies. I have videos on creating multiple pies by different sectors, by different types of companies. You name it. You can have them all within your portfolio, or you can have them individually like I have set up here. Then you deposit cash. You can have your auto investing turned on, and then M1 Finance will buy, depending on your current target percentage and your actual percentage, it'll buy into the lower percent to meet the target percent. So it's really nice in that way. Or if you're more of an active investor where you're watching the markets, trying to either time your buys, your sells, set limit buys or limit sells, then Fidelity may be more up your stream. But those are still two great platforms to check out if you guys haven't checked out or got started on your investing journey. So with that said, that's going to be our sort of closing area there. If you are brand new to my channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. And of course, give this video a thumbs up, make it blue, and I will see you guys in the next video. Thank you.